Good morning, traders and investors. Roger Scott here, Senior Strategist for Wealth Press. Today is Friday. Thank God it's Friday. It's June 23rd. I can't believe June is almost over. 4th of July holiday weekend, the biggest barbecue, the biggest drinking season of the year is upon us. I didn't know that, but 4th of July is the biggest drinking period in the US of A. In Europe, it's Oktoberfest, I would imagine, but 4th of July. I'm going to be checking the seasonality for alcohol today. So if you're in my VIP room, and remember, it's free for anybody, make sure to join the VIP room today at noon. If you need a link for that, you can always send me an email, but you should be able to find it below this video. And if not, again, send me an email. Now, the Nasdaq is opening up about 79 points down, which is not random. That's like the Dow opening down about 200 points. And I got to say, things are just not looking as good as they were when you look under the hood. Now, first of all, let me show you what algos have been hitting really hard this week. They've been hitting the industrial stocks. They're moving away from tech stocks, and they're hitting industrial stocks really hard. And they're trying to make the industrial stocks, which are a big part of the Dow, look like they're breaking out and keeping them here. But I'm going to tell you right now, the momentum level is favoring the bears right now. And I think we're going to give up the chase next week. And I think industrial stocks are going to cool off. Another sector the algos have been hitting has been the consumer discretionary. Again, they've been moving out of technology stocks and into these stocks. But I think this has given up the ghost as well. So the two sectors on Tuesday of this week that were hit really hard were the consumer discretionary and the industrial stocks. Let me show you industrial stocks right here. They were hit really, really hard earlier in the week. That's where the algo money was trying to go to push the stops, to pretend the market's going higher. It's not happening. It's not happening at all. And if you look at the Dow Jones, you'll see very, very similar type of action, but you'll see the fact that we're already in here. But beginning of the week, they were pushing blue chip stocks. They were trying to make it appear that blue chip stocks were going to go up, that market cap was moving away from technology stocks and into blue chip stocks, but that's over. That lasted about 2-3 days. So don't fall for the banana in the tailpipe, all right? No monkey business around here. So the point is, the Dow and consumer discretionary and industrial, those were the three sectors being hit. Now, a lot of folks are asking me, Roger, what about technology? What's going on there? And I mean, look at this thing. It bounced up, it did, and now it's coming down. And what's going on with communication services? They look like they're up there. Well, I'm going to show you something. Momentum levels have been coming down pretty good. If you recall, Infotech, remember it was in the 90th percentile? I want to show you something. You got to see this for yourself. Look at momentum levels. Look at where we're at right now. Speaks for itself, doesn't it? This is in the last week. This is since last week. Notice we're not up here anymore, are we? We're down here, and if I had to bet, we're going to go down weaker. So momentum levels on Infotech is weakening. How about communication services? Remember, it was at 85, 90th percentile. Let me just get rid of this. It's a little sloppy here. Just to give you an idea, look, how many days ago is this? See, 1, 2, 3 days ago. This is Tuesday. They tried. God bless them. They keep trying. But you can see we're here now. We're not up here anymore. And if I had to bet, we're going to come lower because we're still technically, I mean, look how overbought we are. Here, look at that. I mean, we're just getting started. This thing just needs to come down. So I think we're going to see more of what we've been seeing. Algo's trying to pretend that industrial and blue chip stocks have a little firepower and continuing to take down the communication service and the consumer discretionary communication service and technology stocks. I think those are toast. Now, interestingly, the 50-day line, Infotech is still really, really strong, and it's still strong on consumer discretionary. Let's see if that's been coming down too. Just started to. So look at this long term. I mean, I know it's hard to predict the future, but look at this. Look at where we're at right now. See that? Don't fall for it. Don't fall for technology stocks right now. Or if you do, you got to be really, really nimble. But as far as algos, they were trying to distort us this week by trying to manipulate us into thinking that market cap is coming away from tech and into industrial stocks. And I told you earlier last week and this week that is just not happening. Markets are decelerating. The momentum levels are decelerating. And with that said, keep your eye on the bond market, because the bond market can continue moving higher because there's really no catalyst right now for higher rates, and the Fed is doing everything possible to make us believe that they're going to take multiple pauses. We'll see if that happens, but bonds are set to open up almost a full basis point higher in light of what we're seeing right now with the stock market. Remember, when stocks go down, there's a lot of flight to quality into fixed income as well. So very, very important. Now let's talk about what we can expect today, what happened overnight, where the news is pointing, and what we should be preparing ourselves for, right? That's the big question. What's next? We already know what happened. What's next? So stocks are down, as I said. A series of interest rate hikes by central banks intensified fears of a global economic downturn. The tech-heavy Nasdaq 100 outperformed the two other major averages, primarily fueled by gains in mega-cap technology stocks. And again, keep your eye on these mega-cap technology stocks because momentum levels is getting weaker, and it wasn't all that great to begin with. Labor Department reported on yesterday, that claims for state unemployment benefits were unchanged, but they were sticky. They were at about 264,000. Remember, we were at low 200s for a while. So the numbers starting to cool, slight cooling in the labor market, which is usually the last straw before the country goes into some sort of a recessionary pressure. Remember, labor markets are the last to go. So we're either turning up or we're turning lower, and I'm a little bit skeptical right now because of Powell and his decisions. Federal Reserve Powell continued his two-day testimony on Thursday. He reiterated his message that additional rate hikes are likely in the months ahead, emphasizing that the central bank's primary objective is to bring down inflation, and it hasn't worked so far. It's working a little bit, but not a lot. Bowman said additional policy rate increases will be necessary to bring inflation down to our target over time. I don't know how much clearer you could be than that. U.S. futures are now pricing in a 67 almost percent probability of a 0.25 basis point hike. And as I mentioned yesterday, that I don't think it's going to fluctuate nearly as much as they usually do. Today, all eyes are on the U.S. manufacturing PMI preliminary reading in a couple of hours. That's coming. In addition, we're going to get speeches from Fed President Bostic, Loretta Masters. I'm looking forward to what they have to say because they're not the boss. They could say what they want. It's still up to Powell. So they have a little more discretion in how freely they can speak. In Europe, hawkish signals from central banks continue to weigh on sentiment. Losses in energy and bank stocks are leading the overall market lower. Data on Friday showed the Eurozone business growth nearly came to a halt in June as the downturn in manufacturing deepened while the service industry in the region showed only marginal expansion. Folks, if Europe goes into a recession and they're tinkering, they're on the brink of it, it's going to be very bad for this country, and China's already not doing well. China's closed for holidays, not much to comment there. The Nikkei closed sharply lower. Data on Friday showed that the country's manufacturing activity contracted in June. Service sector growth slowed for the first time in 7 months due to weakening business confidence and demand. That's why I think their new prime minister is going to take a totally different turn in the next 6 months to a year. And one of the reasons why Warren Buffett is investing so heavily in the country. Trupanion, one of the stocks that I covered in the VIP room. By the way, my VIP room is going to be opening up for a lot more folks, so you'll be able to join and check out what I've got in store for you, where we give red meat hot trades and option strike prices in real time. Try to follow. There should be a link below this video for my Telegram or somewhere near this video, but definitely join my VIP room. Trupanion soared more than 12% in pre-market after the pet insurance company announced that California approved a 12% increase and New York approved its request for 18% increase. It's a pet insurance company, and that's not good for pet insurance. 3M gained more than 3%. They had some positive news come out. And today, CarMax, and that's the only big company that's coming out with earnings. So again, if you're watching this market, you can see right here that financial stocks are starting to cool off. Interest rates are going higher, not good for financial stocks, and that means regional banks may be in the crapper too. Energy stocks have not been reacting very well to news, and industrial stocks are consolidating here, but I think they're going down. Consumer discretionary technology, I wouldn't bet my money on it at all. Now, what do I like? I'll tell you what I like. Healthcare. As I mentioned, I really, really like healthcare right now. And I also like consumer staples and healthcare. And utilities aren't looking bad either. But again, I would stick with consumer staples and healthcare because I think you're going to see a lot more downside in the market over the near term. These momentum levels are weakening. They're not getting better. They're getting weakening. Now, the only thing that's starting to look sexy, energy's starting to look okay. Let me show you how low the levels on momentum levels. They're almost at the bottom. Once they get here, we'll be ready to go because everywhere else, look, everywhere else, energy's already toast. So it's just a number of 20 days. They have to, it's a little stubborn. And let's see, otherwise, utilities still a little stubborn. I definitely think the stock market needs to cool off, especially the industrial stocks, the consumer discretionary stocks. As you could see here, everywhere else, they've cooled off. Industrial stocks everywhere, it's just the 20 days, stubborn in the short term. But I think they will cool off. So keep your eye on the market and don't be surprised if the market sold off, if it had more weakness than strength. Now, before I let you go, make sure you subscribe to my Telegram channel. The link should be below this video. If you're not watching it on the Roger Scott channel, go to YouTube Wealth Press channel. If you're not watching it on the rogerscott.com page or Wealth Press site, go to Wealth Press, YouTube Wealth Press channel, and you can like, subscribe to our videos, and you can post comments, and I respond there. Don't miss my VIP, my VIP room. It's happening today on Friday at 11 a.m., and I'll ask somebody to post the link there as well. You guys have a great weekend. Send me an email with any questions, support@marketgeeks.com. Just not customer service questions, trading-related questions, and I'll answer them immediately. Talk to you guys soon. Have a great weekend. Bye.